On Tuesday, June 6th, the United States Securities and Exchange Commission charged Coinbase with operating its crypto asset trading platform as an unregistered National Securities Exchange. And to Twitter, they posted a quote saying that you can't simply ignore the rules because you don't like them or because you'd prefer different ones. The consequences for the investing public are far too great. And they didn't stop there. Just a few hours later, the SEC filed court documents requesting a restraining order to freeze all US assets of Binance. The crackdown on crypto has officially begun. But why now and what will come of it? First, I'd like to tell you about today's sponsor, I Trust Capital. Today, people are concerned about the purchasing power of their dollars being eroded due to inflation. They're concerned about the returns they're getting on their traditional portfolios, things like stocks and bonds. Many people want to be able to purchase investments that will preserve their purchasing power, things like gold, silver, Bitcoin, ways to store the value of your money without being exposed to the dollar. What's the problem with this? The problem is that most people have most of their wealth in their 401ks, their employer's retirement accounts. And these accounts do not allow people to buy gold, silver, or Bitcoin. Some of them allow access to ETFs that have exposure to these prices. But number one, you're introducing many layers of counterparty risk. And number two, you don't actually own the asset itself. That's where I Trust Capital comes in. I Trust Capital allows you to open up actual retirement accounts, IRAs, traditional and Roth. You can even roll over funds from a previous employer's retirement account to fund this. You can buy gold, you can buy silver, you can buy Bitcoin and even other cryptocurrencies with I Trust Capital. And if you sign up with my link in the description below, you'll get $100 worth of Bitcoin as a sign-up bonus for opening the account. For years, the entire crypto space was left suspiciously unregulated. Some people loved it and some people hated it, but it was referred to as just a wild west. And outside of black markets, it may be one of the last holdouts of truly free markets. And anytime companies or big asset managers or big money or public personalities asked the government for some sort of framework, some sort of guidance, some sort of regulation, it was crickets from Congress, the SEC, and the CFTC. This complete lack of regulatory structure led to a couple of outcomes for crypto. Number one, it attracted people with malicious intent, which makes sense. If you're the type of person that has tendencies to do things that are illegal, you want to engage in fraud to try and steal money from as many people as possible. The easiest way to do those things is to go somewhere where there are no laws. So obviously, the people with malicious intent are going to be attracted to those places. The second thing that this lack of regulatory framework did was it kept big money, big corporations, and big talent out of the space, all waiting for Big Brother's approval. If you're Apple or Amazon or Facebook, you are not going to risk your standing as a massive American company, risk any money whatsoever by participating in any form of speculation in an area where your Big Brother hasn't already given you a go-ahead. Because who knows if at some point in a couple of weeks, couple of months, or a couple of years, some new regulation actually does come to fruition and negates all the work that you did. So in a nation that loves regulation, loves additional excessive laws, and a government that loves to participate in that, leaving one area with a suspicious lack of regulation can actually stifle innovation. Number three, in opposition to number two, it actually did allow for rapid innovation from some very specific risk takers. You've got the people with malicious intent on one side getting into crypto. You've got the big money, the rule followers staying out of crypto. And you have a third camp of people that are rule followers and they are not out there with malicious intent, and they're entrepreneurs and they're innovators. These people are very far and in between though. There are not that many of them, but the ones who did engage in this space were able to push some innovation forward. The fourth thing that the lack of regulation did was it allowed formation of massive bubbles and crashes, because as the easy money came into play, as interest rates were lowered and as money was printed, it was looking for yield. It was looking for a great return. And so a lot of that money flooded into fraudulent or dumb crypto projects. Bubbles were formed and money was lost. Now, this still happened in regulated markets, like in stocks, but not to the same extent. But now, after all of this, Operation Choke Point is ramping up its attack on crypto. The SEC has charged Coinbase with operating an unregistered securities exchange and has filed to freeze all Binance assets. Let's take a step back for a moment, because the government is not one united entity. The different arms and branches just can't actually agree on how to move forward here. The CFTC, Congress, and the SEC are all somewhat in disagreement. Right now, Congress is currently considering a brand new regulatory framework for all of crypto. Meanwhile, the SEC wants to regulate almost all of it as if they're securities, and the CFTC wants power over many of these as well, wants them regulated as commodities instead. So, what is a security? Well, in 1946, the US Supreme Court gave precedent for a very broad interpretation of the word security. They established the Howey test. Number one, there is an investment of money. Now, it's very clear that with crypto, this applies. There's always an investment of money. So that box gets checked. Number two, the investment is made into a common enterprise. Now, this is very clear with something like a stock where you are purchasing shares of a corporation that is out there trying to make certain products with certain materials and sell them at a profit. And you've got a bunch of people working together to try and accomplish this goal. And to be 100% straightforward, if you are being honest with yourself, many cryptocurrency projects fall under this category as well. So that box gets checked for many of them also. Number three, the investors expect to make a profit from their investment. I think it would be safe to assume that if an investor did not anticipate to profit off of the money they spent on a cryptocurrency, they wouldn't have bought it in the first place, unless you're focusing solely on some of the cryptocurrencies out there that are used solely for payments and or anti-censorship. And then finally, any expected profits or returns are due to the actions of a third party or a promoter. Excluding Bitcoin, I'm fairly certain that the vast majority, if not all cryptocurrencies, they have CEOs, they have marketing departments, they have engineers. They are companies that are operating on behalf of the investors. And so given how the Supreme Court has defined securities in the past, it would seem that many cryptocurrencies actually do fall under the category of a security and therefore are under the jurisdiction of the SEC. But it's not clear cut for all of them, because there is an argument that many cryptocurrencies should be regulated as if they are commodities instead. Now, this might sound confusing at first, because when you think of a commodity, you think of gold, you think of silver, you think of oil, you think of natural gas, you think of wheat, you think of potatoes. These are physical goods, really materials that go into the creation or the production of final end products. But because of recent technological advances, there are also other things that are categorized as commodities, such as cell phone minutes, bandwidth, and financial products like foreign currencies and indexes. And there's very good argument to be made that at least some cryptocurrencies are better defined as commodities under this definition. But guess what? It doesn't matter either way, because both the existence of the CFTC and the SEC are actually a violation of the Constitution. Brian Armstrong, CEO of Coinbase, recently on Twitter said, "The SEC and CFTC have made conflicting statements and don't agree on what is a security and what is a commodity. And instead of publishing a clear rule book, the SEC has taken a regulation by enforcement approach that is harming America." He is right. Three-letter agencies should not be allowed to do things like this. The Constitution was set up in order to try and create a nation that was governed by rule of law, meaning that it doesn't matter what person comes into power, they cannot create new rules or new laws that violate the law that governs the creation of laws, the Constitution. Otherwise, whoever is in power gets to create new things that serve themselves or serve their base. And then you have rule of man. Instead, the base law, the foundation, the Constitution could not be violated. Article 1, Section 1 of the US Constitution states that all legislative powers, not some, but all legislative powers, meaning the power to make laws, shall be vested in a Congress of the United States. Who is included in this Congress that can make these laws? A Senate and the House of Representatives. This means Congress is the only part of the government that can make new laws or change existing laws. This very clearly leaves no room any CFTC, any ATF, any EPA, any FDA comprised of unelected and unaccountable bureaucrats who get to make arbitrary decisions by themselves about laws and regulations that are treated as law that affect the lives of every American. The point of putting all these powers in Congress was to limit the amount of laws that could be put in place. If Congress doesn't have the time or the expertise or the political popularity to put something into law, there shouldn't be a law about it. It is a violation of the Constitution to set up a separate agency and designate that agency to create laws on behalf of Congress. The very existence of these agencies violates both the letter and the spirit of the Constitution. But there is actually some good news here. A bill recently got introduced into Congress that would clarify these things the right way. This bill would provide a path for a digital token to go from being treated as a security to a commodity. It also gives clear definition as to when a project is decentralized enough to not qualify as an investment contract. This is exactly what most Americans want. Most Americans do want laws. That's why we have so many laws here. I know I'm the oddball out here wanting a smaller government. Most Americans, and especially large corporations, they want the government to come in and say very clearly, this is the guideline, here are the definitions, here is what is allowed, and here's what's not allowed. Once they know the framework, once they know where the lines are drawn, they can get to work and start innovating and start producing wealth again. And this bill does exactly that. It gives precise numbers and guidelines on when it counts as being a decentralized network or not. This is good. This is Congress's job to do things like this, but it also has an exclusion for stablecoins. Stablecoins used for payment are exempted from securities designation, which really highlights what I've been saying for a long time now, that this whole thing is a Trojan horse for a central bank digital currency. The government stays out of it to allow all the fraud, all the scams, the bubble, people to lose their money to scams or just to bad investments. Everybody starts craving regulation. The government comes in and lays a regulatory framework that's actually too oppressive for any sort of innovation or any of the good things to survive. And a couple of them that they've stamped, like a certain number of these stable coins, they will allow them to survive. They'll be co-opted into a central bank digital currency. And for more on that, I suggest watching my recent video on Operation Choke Point. As always, thank you so much for watching. Have a great day.